Hi, everybody. Scott Riley, the Market Update Desk, post election November 6th, NMLS 157524. Wanted to connect with you. I wanted to have a little bit of more study on the market reactions before I did an update this today. So I'm waiting a little later in the day to do this. Obviously, it's the afternoon. So, as everybody know, we are going to have a change in president. The market, initially the Dow was up over, I think 1,600 points to start the day, settled down a little bit, but it's still up substantially, especially on a day-by-day basis. We did have the bond market spike up, which I'm not surprised, because generally you're going to have stocks and bonds work in opposite reactions. So bonds, the 10-year spiked up to about 4.45, and I think we're at 4.43 as we're talking right now. A few days ago, I talked about it, that I thought we were going to get to somewhere in the neighborhood of 4.5 before we caught a ceiling, started to come back. And I think that's going to be the case. So like I said, as we go forward, I think definitely what's going on is the stock market is going to see an opportunity to get some mergers and acquisitions in the next year that they haven't been due to FTC oversight and SEC oversight and decisions. So the market definitely does have euphoria with that and the expansion of the M&A activity that's likely going to happen, starting, maybe second quarter next year. The 10-year bond, I think we're going to settle back down. Now that we're past this, we're looking to the next thing. What's the next thing? Well, tomorrow we are going to get the Fed decision. Now, before we thought it was going to be a quarter point that we were going to get, and that has wavered over the last 2 weeks. I think with what's going on now, especially in the stock market, we're probably going to get that quarter point. I don't think we'll get one in December, though. So I think this could be the final cut for the year. Then the big thing is going to be Chairman Powell's Q&A afterwards to see if he gives some sort of insight guide to what the committee is thinking, specifically on the new change on the political side and where that's going to line up as we go forward. Now, good news that we had yesterday, the 30-year bond auction was met with above average demand, which is great. And it was graded, I'd say B plus A minus is where it was heading in, which is great. The bid to cover of 2.64 was above the 1-year average of 2.39. So the demand for the item, the bond, was there, and that's great news for the bonds. Direct and indirect bidders took about 89.8% of the auction, compared to 83.8% in the previous auction. So there's good news on that. Like I said, we started out worse in the bond market. We've come back down, which has helped. We did start out somewhat dramatically, I think about down 26 to 28 basis points in the mortgage-backed securities, and now those are down to about 18 basis points down. So some of the half of the stuff is done with a week. The next is going to be the Fed meeting. So now that we can, once we get back, we got past yesterday, and now once we get past Thursday, we're going to start to get some stability in the market, and I think we'll start to get some downturn in mortgage rates, which would be a very helpful thing for everybody. It's still a great time to buy. I can't emphasize it enough. When we hit the spring market, we're going to have a truckload of buyers enter in the market, and there's going to be back to the multiple offers, bidding wars, bid over ask, appraisal gap guarantees, all this different stuff. Do yourself a favor. Give me a call. I can break down the facts, not the conjecture. We keep things to facts, and I can help you understand so that you can make an informed decision for what's best for you. Give us a call, 616-293-2189. We hope you have a great afternoon. Take care.